What's up, guys? Welcome back. Been away a couple days. Sorry about that. I guess it was just Monday. Maybe Friday. I can't remember. Anyways, we gapped up after the weekend, as I'm assuming most of you all did as well. SPY was ripping on Monday. This is last Friday. This is Monday. And then today kind of sold off a little bit for me. We're down a little bit today. But on Monday, I wasn't really trading, but I was able to sell a bunch of calls. So with all this gapping up, a lot of my shares that I have 100 up or more, they were positive. You know, American Airlines was up a lot. You know, that was this. Levi was up, AT&T was up, Space was up, Kodak, I think I already sold one on that, but basically Monday I sold all these covered calls, and yeah, now you see that's all these calls that I sold are now positive. The stock prices went down. This is what's awesome about selling calls and selling puts, because it basically just inverses each other. It's a hedge. When your share price goes down, if you sell the call at the right time, well, your call goes up. So this Space call I sold yesterday, I mean, Space went kind of crazy, actually. I'm down on this overall, but I think it'll still expire worthless. Maybe not. But anyways, this isn't a good example, because I think I might not actually make it out on Space. I might have to sell my shares, but we'll use, I don't know. I mean, Kodak, yeah, sure. So Kodak jumped up a bunch one of these days right here, maybe. And we sold a call. And then Kodak's come down since then, and look at our call. Gone up in value. Shares have gone down. Kodak call that we sold has gone up. So I put in an order to buy it back once it gets down to 5 cents, because that's the cheapest I can buy it back for. So that might be tomorrow if it keeps going down. And then I will maybe wait until Kodak shoots up again and sell another covered call. I think that's kind of what I like to do better than just selling another covered call right away. It kind of depends on the stock too. So things like Space and Kodak, they can just rip. I guess AAL can also. These, maybe it's better to wait until the stock price shoots up, because sometimes it'll happen where AAL will just be trading flat, whatever, like here, and your covered call expires here, and then you sell another one here and nothing happens with it, so you're just waiting on time. But maybe it doesn't expire till here, and then it rips up right here. So if you just waited till here, you would have gotten a lot more premium when you sold that covered call, as opposed to just selling it right when you have it available. So I don't know, I'm not sure which way is better, honestly, but I kind of like waiting. I'll just check out, I'll look at today's return, I'll be looking at the share prices, and if, you know, something's really strong that day and I have 100 shares of it and I don't have a covered call out yet, I'll sell a covered call, you know, up the strike price from at least higher than where I paid for it, and in some cases much higher. So Levi, I sold a covered call this day, I think, or was that the weekend? Yeah, it was on Monday I sold a covered call. It was trading at $13.50. My average price is $13.83. I sold a covered call for 14. I was like, easy peasy, I'll sell it for 14. Levi has gone down, and look, our covered call, we're making money back on it, plus 10 today, and it'll probably go up even more tomorrow as Levi goes back down. So that's a nice little strategy that's working out for us. We're down a little bit today, but all these covered calls are positive today, so that's cool. Debit spread on Tesla, I had an order to sell it out, but I didn't. But maybe it'll come up tomorrow. I'm not sure on Tesla what it's doing. But yeah, it's just consolidating, it looked like. Yeah, it's just kind of consolidating the last couple of days, so I really don't know. It's kind of following the market, kind of following the SPY, it seems like. So SPY, this looks like a double bottom right here, but I don't know. If it's double bottom, I think it's a bullish. And you had this 2 bullish days, but it might come back down. Might be back down in this range tomorrow, and the next day it might be red. I still have, let's see, Oh, before we get on to that, yeah, I tried to sell this because I'm not sure about Tesla. And Intel actually was starting to do pretty well today, I think. That down a little bit. It's just trading flat. So this is kind of a bull flag. Yeah, I'd say. Yeah, so this might keep going. And this, let's see, this expires the 9th. So these expire pretty soon. But I'll let this go a little longer. Today it gained $20 in value. Trying to at least get my money back on that. Rocket, this one's worthless already. General Mills is worthless. Yeah, so that's the long term. This month recap, when is that coming? That will come either tomorrow or on Thursday, and it's not a great one. You know, these credit spreads that expired in the money definitely killed us. Right here, these two. Boom, boom. And then this was buying Rocket shares right before earnings. And then Tesla, and then the SPY and all that. And so we're down a bit, but we'll get that back. On this account, yeah, I still have the Wells Fargo put. And, you know, it rallied on Monday like everything else. But today it's kind of sold back off. So it is kind of just trading in a range. It's not a crazy sell-off. But I've got till the 20th. So it looks like it's staying below the 180-day SMA. Or the MA, just as the moving average. So it probably will make new lows, maybe tomorrow or the next day. And then this will get a lot of value. So Nike calls worthless. That was for earnings. Nikola put, I guess I paid a huge premium for this Nikola put because, well, yeah, so this shows, I guess, what theta decay, what happens when you don't have volatility. So when did I buy this? Let me give you guys a little example here. 9/21, 10/44. Is that here? No, it's back here. Okay. So let's see, 9/21, 10/40. So right here. So there was a lot of volatility here. It gapped up extended hours, looks like, or gapped down rather, and then it was flat. But there was so much, you know, it was really red this day. Basically, a huge gap down. So I paid a premium for it because a lot of people thought it was going to keep going down, even though this day was flat because it opened down. So what happened is I just paid for a contract, and I paid a lot for it. And then what happens is this just trades sideways. So when I paid for it here, it gained a lot of value, actually. Can't remember, maybe it was just that same day it gained value. That was 10:30. Yeah, so maybe it was up here when I bought it, and then it gained value because it came down. And then it's just, this day it just lost value. Oh, and then this day it actually gained value, I think. Yeah, this big drop, it shot way up. I was like up 140% on this thing, on this Nikola put, just because of all this volatility. And then it flattened out. Share price is way down here now. We're at, you know, 18, much lower than where it was here, and lower than where it was here, even though right here it was worth, you know, 140% or something. Share price is lower. It gets flat extended hours, flat trading day, flat extended hours. It's just slowly falling here now. Slowly falling. And look, this thing's lost value. It's lost value. How is that possible? How is it possible? When I was here, it was more valuable, and now the stock price is lower and it's less valuable. That is volatility. So there's no volatility now. It's just solid consolidation. It's just trading flat, and this thing is just decaying. So that's what that is. That's why you've got to, sometimes you just want to get out of positions if there's volatility, like huge red day like this. Even if you think it's going to keep dumping, you never know. And that's why it's nice to have two contracts. You can sell one, make it free at least. But when it was dumping this and then did this, and then I saw this and I thought, okay, this is just a little bounce because it was way oversold, extended hours. So I was like, this day, a little bounce, and then it came down. I was like, yep. And then it's just been flat, which I did not expect it to stair step like this, but it's definitely stair stepping. So this contract doesn't really have enough time to fully, I mean, even if it gets in the money, which it might get in the money, it might get in the money tomorrow. That's not gonna be that valuable because there's not much time left on it. You know, this Friday. So let's see what they're for on Friday. So it just shows the premium I paid because the time I bought it, there was a lot of hype for it dropping, for lack of a better term. So the puts have gone up in value, like 155. So $55 if it's below that. This one's 135. Yeah, it's just going to be a tiny bit of premium. And that's the same day. So basically, if it doesn't sell off hard, this thing's going to not really return much. We'll see. I might sell out of this tomorrow, actually. Probably should have today. No, I think it'll keep selling off. And maybe it'll pick up momentum. Tomorrow, I mean, honestly, this is a lot of consolidation. This is definitely a bear flag. So we'll see. I was very analytical on this Nikola play, but I kind of wanted to explain it, and I kind of want to look over it too, like how, because I remember seeing this percentage go way up, and I was like, what is happening now that it's low? Because I know Nikola hasn't reversed, like this has just kept going down, but I think that's just volatility. Okay, that was Nikola. BAC, Bank of America. Bank of America kind of did this bounce with everything else, and now it's selling off again. It's kind of following the SPY actually. A little bit, at least today it did. So I'm still bearish on this. It's below the moving average, so we'll see on that. And that's it for that. E-Trade account. I got into Peloton. I should have probably sold premium on it instead of bought it, just because with how flat everything's been, just the consolidation overall. But Peloton, this is kind of a little bit of a YOLO for Peloton to run up in the next like week or two if it breaks this $100 mark. That's been kind of a resistance for it, and this is kind of a bullish pattern right here. So we'll see if you can break that $100 mark. It might go nuts. I don't have a ton of time on this. I got it the 9th of October, so that's like 2 weeks. Yeah, that's the Friday after next. I got 5 debit spreads, the 110, 111. It shot up in value, but spreads you can't really tell. But I did kind of maybe get into it at a good time. I bought in like right around here, so we'll see. I don't think it's up 50% already, but maybe it is. Maybe I should sell it. Yeah, so that's all my plays for now. Tomorrow, we'll see what we have in store. I need to still trying to get out of some of these. Webull account, I still need to change it to margin account. Need to keep closing plays. I'm opening plays, but they're shorter term, so I'm closing quicker. So it's just hard. It's hard to close out of all these plays that have a bunch of time on them and you think they're going to come back up, but I probably should, like January, December. I guess these don't have much anymore in November. Yeah, I should just do that. Just do spreads, credit spreads. Anyways, thanks so much for watching, guys. Remember to sub up, like up, comment down. Let me know how you're doing in the market. Make your money happy money so it'll stick around. And we'll see you tomorrow. Peace out.